Hey everybody, Rob Maurer here, and today we are joined live by Alex Potter of Piper Sandler. Alex has covered Tesla for quite a long time. We've had him on the podcast a couple of times, so today we're just going to go through, everything that has changed the last few months with Tesla. Alex has done a lot of research on autonomy, on energy, and then we're also going to talk a little bit about Battery Day. We are going to be doing a Q&A, so on Alex's side, they have their investors, Piper Sandler investors, that are going to be asking some questions. And on my end, if you want to ask questions on YouTube, feel free to do that. We're going to select a few of those to also go through. So thanks for joining, Alex. Anything you want to add to that intro?
I don't think so. Very much looking forward to it. As Rob mentioned, I'm analyst at Piper Sandler. I cover Tesla. And for our institutional clients who are dialed in right now, I know there's a Q&A function, so Jess in Corporate Access is watching that. And if you have any questions you would like to ask me or Rob, you can either use that function or you can send me an email. I've got my emails up here as well. So maybe, I don't know, Rob, do you want to, I'll ask you to do an intro.
Sure.
You introduce yourself first. My audience understands who you are, and then I'll do the same.
Sure. Yeah, so my name's Rob Maurer. I have been a retail investor in Tesla since 2013. I started doing the Tesla Daily sort of channel as a podcast back in August of 2017. The reason I did that was just because I saw a lot of misinformation out there in the media, and I thought a lot of investors were having trouble getting good, accurate information in a timely manner. I felt like I could help with that just because I was doing so much research on the company every single day. So just on a whim, sort of started Tesla Daily as a podcast then, and since then it's grown. I took it full-time last year on YouTube, and over the last year we've gained about 100,000 subscribers. So a lot of people definitely interested in Tesla and interested in it from an investment perspective. And I'm lucky to be joined by people like Alex that can help us understand that.
And also has more or less has a monopoly on the question asking when it comes to the quarterly earnings calls as well, I might add. So if obviously the Tesla's approach during these earnings calls is atypical, but for institutional investors and other sell-siders, when we first started seeing this say.com stuff, it was sort of jarring or a little bit odd. But for those who are unaware, that works by a vote process. So people like Rob and others, they submit questions on behalf of retail investors, and then they get upvoted. And Rob, because of the quality of his questions, ends up getting basically 5 out of 5 or something of the last questions.
Well, you're limited to 3, so only 3.
Oh, okay.
And I've cut myself down to 2 because it's, everyone should have an opportunity, and not everybody has the audience, so.
Okay. That's generous of you.
Yeah.
All right. Okay, so how do you want to do this, Rob? This is going to be the third time that Rob and I have had a discussion. In the past, it's been sort of an interviewer, interviewee sort of a setup. But I think this time, and we can do it that way as well. I know that we've got some topics we want to get through. But then after that, we can open up to Q&A. And if nobody has any Q's or A's, then Rob and I will just talk.
We'll ask our own questions. Yeah, so I think I want to start off with just your last couple of notes. Since we last talked, again, as I said, you did the big updates, deep dives on both the energy business and the autonomy business. And that's something that particularly retail investors have been frustrated with. I don't know if it's, institutions or Wall Street or analysts in general, just not really modeling for those things. And so I'd just like to, go through what your models are sort of showing and the thought process that you approach them with. I know that's a broad question, so I guess we can kind of start wherever with that.
Yeah. So I think it's not just retail investors that are frustrated with it. I mean, I think that investors in general are frustrated with it. Like these two topics in particular, software, autonomy, self-driving, robotaxis, but then also the stationary storage business, energies, or the batteries, gigantic mega pack grid scale type batteries. A lot of people, they approach these topics without really knowing what to do with it. Like, how do you build a model in the first place? It's not like the auto business where we're getting tons of data from lots of different regions, market share, pricing. People are tracking these things on a daily basis, and you can track Tesla's progress. You have a much harder time doing something similar in the stationary storage business. Like if I was to ask you how many megawatt hours of stationary storage were installed last month and what Tesla's market share within that in Europe was, people would be like, I have no idea. I don't have any of the ammo to answer that question, but they answer those questions daily for the auto business.
Right.
So partially it's a question of, data availability. Partially it's also a question of P&L contribution. Like these topics aren't a big enough needle mover today in terms of what Tesla's going to do in any given quarter. So people just don't devote as much bandwidth to it. But that being the case, especially the bigger the market cap gets and the higher the valuation goes, the more you have to consider pieces of the business like this that, at least if you're going to believe Elon Musk, take him at his word, that these parts of the business are core, right? And potentially at one point going to be as large or larger than the automotive business. If that's even in the right zip code, then you can't just continue ignoring them. So, we published a big, sort of deep dive on autonomy and the software opportunity. And then we did a note. I wouldn't know that I would call it a deep dive on the energy business because we're still sort of getting our feet wet there. But yeah, I don't know if you had an opportunity to read them. They get a little bit detailed, but it was educational one way or another. And at least now we have a framework for thinking through, how big these businesses could potentially be. And we can get into some of the assumptions if you want to get really into the weeds on specifically
always.
What. Okay, great. I'll pull my model.
Yeah, I'll test your knowledge here. But you guys were kind of approaching it from just trying to understand really what the market potential was, right? That was sort of the starting point. Yeah.
So one of the things that I would say, maybe we just start first with autonomy.
Sure.
The thing that I think sets Tesla apart versus most others in this space is that it's not a theoretical thing for Tesla like it is for others. If you are Waymo or your Cruise or whatever, you either have a self-driving robotaxi fleet or you do not, right? And so if you do, then you have revenue and you have something that you can build, a model. How much revenue, how much does it cost to manage this fleet? How many rides are you giving? Blah, 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 blah. How many regions, what cities? But these other companies don't have a robotaxi fleet, right? So the revenue is zero, or at least it's very early stages. And it's very difficult to build a model on something like that. But Tesla's different because they're generating revenue today from the potential for self-driving in the future. So that was basically our starting point, right? People are opting in or not. They're paying, $8,000 or not, to have the opportunity to have self-driving functionality at some point in the future. It's, in the neighborhood of 1 out of every 4, 1 out of every 5, or whatever it is of people who are opting in for that. That was our starting point. So then what you do is you make some assumptions, which, could for sure be way off the mark regarding when full self-driving capability is actually a thing. Like Elon Musk always talks about it like it's this, it's just around the corner, but it's perpetually just around the corner. So we'll have to wait and see, right? In our model, we don't expect sort of true self-driving functionality from a technical standpoint and a regulatory standpoint until like the late 2020s. Between now and then, we more or less assume that Tesla will continue selling vehicles. There's no fancy schmancy business models where they're owning robotaxi fleets or anything like that. All they're doing is just continuing to sell vehicles. They're making a product just like they do today, and people can either choose to buy the self-driving or not. We also assume that there will be a subscription option, right? So you can either pay the $8,000 and eventually it goes up, or you can divide it into subscription payments.
Right, which Tesla said they will offer.
Yes, right. And so these are like concrete things that you can hang your hat on today that are already in the business that, It's not like Cruise or Waymo where you have to make assumptions based on no real guidance. Like these are, so the main sort of levers that we put in the model then are, number one, like what is Tesla's market share for vehicles? Number two, of the number of vehicles that they sell, how many people opt in for the self-driving functionality and how many don't? Number three, what is the price for the self-driving functionality in a lump sum or as a subscription? And then number four, how many people who didn't opt in initially decide to opt in after the fact? Because people can do that, right? If they said, today I don't want to pay $8,000, but then 5 years from now I realize that self-driving Teslas are actually a thing. My Model Y or my Model 3 is future-proof from a hardware standpoint, so I can opt in and probably pay a higher price at that point. So we make all those assumptions and then model out. Obviously, that's going to have a very substantially positive impact on profitability because this is, software revenue at, no incremental cost or very little incremental cost. So between now and the late 2020s, we model Tesla's market share going up and to the right. We model the self-driving, the FSD take rates similar to what they have been. No huge inflections, not a lot of people opting in after the fact because everybody's still skeptical. But then once you get to the late 2020s, we do have things ratcheting up, right? That's the point at which people are like, wait a sec, this is actually real. Like I said, we could be way wrong. But the other thing that happens at that point is once people actually buy in and they think that this is really worth, it's first of all technically capable of doing what Elon Musk says it's capable of doing, then the price goes up. Right. You're not going to be able to get it for $8,000 anymore because it's a self-driving Tesla. And what's that really worth to you? So we model all of those things out and, link it in with our model. And that's like the real secret sauce here is that if you believe all this is true, then it ultimately gets reflected in margins. That's where you can start getting to a point where, Tesla's a 20+% operating margin type company. And that's not assuming 100% opt-in rates or anything like that. But like I said, it's sort of an involved note, but we were at least, tried to be transparent with the assumptions that we made, and, people can, I don't know, agree or disagree with them. I'm sure that they will.
Yeah, same with any update, I think, any analyst note. But I think what you're talking about there is that's essentially the process that Tesla has done historically. They've grown their market share, they've grown the volume, they've improved the full self-driving feature set. More people are opting in, they're charging a higher price. Like that's exactly what they've done for the last 4 years since, Autopilot 1 came out. So I think to extrapolate that is probably the wise move because they're not just going to stop here. And I don't see any reason for that sort of direction not to continue, even if full self-driving as a full robotaxi doesn't necessarily happen next year or the year after that or the year after that. There's still value being added and customers are still buying into that value, which is adding that software margin, even in the short term.
Right. That's and this is like, I don't know. I'd be curious because also for people who are listening, Rob, his mind is like a steel trap. He can go back and remember, or maybe it's just that
only on Tesla.
Yeah, only on that one specific topic, but has this sort of uncanny ability to go back through all of this, old transcripts and conversations and things, and pluck out these data points. But have they ever actually committed? I know that they've talked in sort of a hand-wavy way. But have they ever actually said that they're going to have a robotaxi? They've talked about theoretically how they could, but is this like, it's not like we're basically knowing at this point that they're going to have a $25,000 car, for instance. Like that's something they've more or less committed to now. And they've committed to making a Cybertruck. Like these are specific commitments. Have they ever made something that specific on a robotaxi fleet?
You're definitely challenging my memory here, but I think back in the 2018 annual shareholder meeting, or 2019, I guess it would have been, I think at that point Elon had referred to, or maybe this was even Autonomy Day, I think at that point Elon had referred to having a fleet of essentially 1 million robotaxis on the road, because Tesla would have 1 million vehicles with Autopilot 2 hardware out at that point that could then theoretically be updated with software. So I think they did actually refer to it as robotaxis, but again, maybe that's capability or whatever. And then
I think that's an important distinction though, because that's not actually a Tesla-owned robotaxi fleet. What that is like, I bought a Tesla which can self-drive. Like, I can go pick Rob.
Oh, you're saying Tesla owning their own fleet?
Yeah, like that's like, if I'm modeling something and putting it in Tesla's financials, like Uber right now gets revenue from selling rides.
Right.
Has Tesla ever spoken about getting revenue based on me or you taking my Tesla somewhere? Like, that's my revenue, and Tesla gets the revenue from me when I buy it from them, right? Like, I buy the car and it's embedded in the price, but it's not an ongoing revenue stream. Yeah, I think, right?
So they have talked about it. They haven't fully talked through their entire plan on how the business is structured, but they have talked about allowing Tesla owners to put their car on this Tesla network, which will act like Uber. And then I'm pretty sure they have talked about a revenue split between that person and Tesla. So when that does eventually happen, when the Tesla network is a thing, we might see them shift to a point where maybe you're no longer purchasing that option up front for, $10,000 or $20,000. Maybe it's free with every vehicle, and then maybe Tesla is just collecting a significant chunk of the revenue. I think maybe there's probably a balance in there somewhere, but at that point, to me, it doesn't really matter too much, because whether Tesla's collecting the revenue up front or as a portion of each individual ride, there's so much value that is unlocked from that at a super high margin that, what's even the point? It's like, it's going to be a good investment if that happens.
Yeah. No, and it is still for sure a big if. I mean, that's why the take rates aren't 100.0%.
Right.
So, okay, but anyway, that's how we, at least conceptually, how we thought about it, right? No massive change in business model, just Tesla selling vehicles, customers either opting in or not based on the availability of self-driving. And we ratchet those take rates up and the pricing up at the end of the 2020s, beginning of the 2030s. And then we value Tesla on a 20-year DCF. So we make our assumptions regarding what the market share is going to be and self-driving take rates and things. But, before we didn't have any of that built in. So now we do. So at least we can talk about it specifically. I also have a question from, I just got a question.
Ooh, we got one. Nice.
From Mike. Yeah, we got one from Mike. I'll just call you Mike. $25,000 vehicle opens up a huge TAM. Will be a big part of the Tesla story in 3 years or so. That's true. But to make a margin on it, the cost of a Model 3 has to be roughly cut in half, from $40,000 in cost of goods sold to low 20s in cost of goods sold. How do you think Tesla achieves this? What kind of unit volume do you forecast?
Yeah, I think that's I can give my thoughts and then you can share as well. But
yeah, take a swing.
I think for me, obviously Tesla talked a lot about cost reduction at Battery Day, and maybe this can just lead us into some Battery Day discussion. And I do want to come back to energy. But I think, what Tesla laid out at Battery Day was a path to reducing their cost per kilowatt hour on batteries from the current level by 56%. So when you're talking about the overall cost of the vehicle, obviously the battery is a huge portion of that. If Tesla's at, let's say, $120 per kilowatt hour today, on the Model 3, a 75 kilowatt hour pack is going to be, $9,000 or whatever that is. So Tesla's talking about having the ability to have a 75 kilowatt hour pack for, instead of $9,000, something more like, $4,500 or something like that, maybe even a little bit less. And that's going to put a smaller vehicle, with all these other updates that Tesla is making, like taking the battery cells and putting them directly as a structural component of the vehicle, That's going to improve the vehicle's efficiency. So 75 kilowatt hours is actually going to be able to make the vehicle go further. And then it's also a smaller vehicle.
Right. You think you needed to be 75 kilowatt hours?
So you don't even, you wouldn't even need 75 kilowatt hours, but if you did, it would go further on a cheaper battery pack that's, $5,000 cheaper. But then you can even take kilowatt hours out. Say you take 15 or 20 kilowatt hours out, and then your battery pack is maybe like $2,000 or $3,000, rough numbers there. So then you're cutting, $6,000 just in the battery. And then Tesla's talking about doing all these other things like casting of the frame, which reduces the parts, by hundreds if you're talking about both the rear and the front frame. That also is going to make the vehicle more efficient. So there's just a lot of room here that Tesla has already figured out how to cut those costs down to these levels. And that's why I think, they're willing to talk right now about the potential for that vehicle. And then the other thing I would say is, even though the average cost of goods sold on the Model 3 right now is probably around $40,000, that sounds about right. The standard range version would be quite a bit less. So Tesla would not actually have to cut it by half, but probably more like a third, maybe a little bit more than a third, I would guess.
Yeah. I mean, there's also other things too that, they could, I don't know whether they really want to go down that route or not, but obviously in the broader automotive market, the interiors and things for cheaper cars are chintzier. So, I mean, like if there are ways that maybe dilute the quality of the user experience that they could explore if they were really wedded to having, incredibly cheap cars. The other thing too that Mike mentioned here, which is accurate and is a perennial topic, is, the volume implications of having a $25,000 car. Clearly, if you back calculate from a 3 terawatt hour capacity, you start getting some silly numbers, tens of millions of cars of production capacity under one roof or under one,
company,
corporate entity, which is insane, right? Having 1 out of every 4 or 5 cars being sold is a Tesla. And is that realistic? I think, first of all, nobody has the gumption at this point to model that. We aren't. So, I think there's definitely still room in the model. Like we're not even a quarter of that.
So
by
you
the
guys
end of the decade
sort of peak around like 5 million a year, 2030.
Yeah. Yeah. I mean, actually we get to 5.5 by like the middle of the 2020s. And then we don't do a lot from there. Like a lot beyond that point, a lot of the growth comes from energy and from software for us. And it's not because we like this $25,000 car, even though, like, again, there were hand-wavy commitments to having cheap cars, but there was also a period in time where Elon Musk said they're never going to make anything cheaper than a Model 3 because, like, the value of a Model 3 is going to be so high when it's full self-driving, and it's going to democratize access to electric transport to begin with. So there's really no point in talking about really cheap cars. But now they are. So I know we've talked about this in the past, but in order for me to put something in the model, I want to have like something specific, like there's a product,
right? Not just Elon said.
Segment, right? And now they have, as of a couple of weeks ago, they're talking about a specific product, and they're talking about in China and in Europe making, having those teams there making vehicles for those markets, presumably smaller urban type hatchback. Maybe that is some of the $20,000+ dollar price point vehicles that they're talking about. So now you can start putting things like that in the model, but I haven't. So
back to the drawing board.
Anyway, yeah, back to. I mean, we're always going to be going back to the drawing board with this model, like, because there's always a new tab to add to the forecast with this company, which is the exciting thing about it, right? I mean, you're dealing with unlimited TAM, and a guy or a company, right? It's not just one person, but that has sort of the fortitude and the gutsiness to go into these massive segments of the economy and just torch them, which is why it's so fun to cover the company. But it's, obviously it's also a challenge.
Right.
And energy is, another area that, when we can talk about it. I have, we did put a note out on it. How much time do you spend, getting, deep into that, or talking about the specifics of energy?
Yeah. Definitely not enough.
In the podcast.
Definitely not enough. Yeah. I mean, I update on sort of the projects that Tesla is doing, but I think, like you said earlier, it's just a little bit more of a difficult market to get information on. Like, Tesla's a car. Like, people are excited about it. People are less excited about a battery that sits, in their garage. There's just not that same, for a retail investor, there's not that same sort of connection. So I think there's less news coverage. There's less just information from a, industrial standpoint or an industry standpoint. So it's just a little bit more difficult. And then personally, I just have less of an understanding, because historically I've been less interested in a battery than I have been in a vehicle. So I think it's a lot of those factors. And if I could just, we'll stick on energy here, but I just wanted to add one other thing to sort of the conversation before about the $25,000 car. Tesla right now is trying to capture 25% margins on the Model 3 and the Model Y. They don't necessarily need to do that with the $25,000 car. So there's also some room for them to come down there.
Yeah.
Because Tesla's about to generate a ton, like so much. People don't realize how much operating leverage Tesla is about to show this quarter and next quarter. And then in 2021, like, it's just going to get kind of crazy. So Tesla's going to have a lot of room to bring their actual gross margins down while still either maintaining or also growing their operating margins and earnings. So I think that's also going to help them just lower the costs of their product offerings. I expect that to impact the Model 3, the Model Y, Model S, as we've seen the last week, 2 price cuts this week. So I think all that's going to also stack up with the battery improvements, the design improvements, just volume. It's all headed that direction.
Yeah. Yeah. I mean, that's true. I don't think there's it's not, written in the stars that they must make the same gross margin on every one of their products. I think the other thing too, that is generally, and they cut price on the Model S the other day. They constantly cut price, and I think, obviously, I mean, cutting price on the surface, it looks like a bad thing, and people are like, oh my God, they're running out of demand, whatever. Like, you should assume that if they can maintain gross margin, like company-wide gross margin in that range, like a 20+% range, using whatever combination of tools they have, whether it's free money from regulatory credits or whatever, they will take the opportunity to cut price 10 times out of 10 in order to get better. Like, people have to stop thinking that price cuts are a signal that demand is tapering. Like, that has been wrong every time so far. Like, and people need to stop saying that, but they won't. So that's another thing that I wanted.
Yeah, that's a great point, and I would agree.
I mean, it's like the whole mission of the company is to try to get as many of these things out there on the road as possible.
Exactly.
So,
the other thing that I would say too is there's a benefit to having more units in the market, just obviously from a mission standpoint, but because Tesla does have that software capability, the more cars they get out there, even if they're literally zero margin, which I think you actually have this in your note, like the margins on the actual vehicle sales going to really, really low. Because
eventually,
because there's a benefit to Tesla just getting that out there, and then they just make all their margin from the software options as that software improves.
Yeah. Even if I can't remember the specific numbers because it's been a while since I've looked at it, and it would take me half an hour to find the specific cells in the Excel model, so I'm not going to torture you with it. But there was, at some point, it gets, where the opt-in rates are high enough, and the cost of the actual vehicle gets low enough so that they can sell, the actual piece of metal at cost or at a loss and still be getting 20% operating margin. But obviously there's all kinds of assumptions underlying that, and, software capability and regulatory approval and take rates and all that. But like, you can at least articulate a vision of the future where that's the case. Like, the car is a vessel for the software.
Right. And I think that's the scenario that allows you to have these sort of crazy high market shares, because at that point, there's just nothing competitive. Like if you can buy a Tesla Model 3 for $20,000, like most people are just going to do that versus buying like an opening price point, Honda Civic, I guess.
Yep. Somebody could just say, this autonomy thing's not for me. I'm just going to opt out and buy it at cost.
Right.
And Tesla still gets the data, like the car is still functionally capable of being autonomous if that owner decides to turn on the functionality at some point in the future. And Tesla can still sort of harvest the data that it's gathering. So anyway,
all right, let's go back to energy.
Should talk a little bit about energy.
Yeah. We keep getting sidetracked.
So the framework. So you mentioned about like conceptually how to think about this market, and I actually have another question here that's along these same lines, which is I'm curious to understand what the megapack utility opportunity is. What's the size of it? What's the best way to follow this opportunity? And so we wanted to answer that question too. And at Battery Day, they talk about it. They're like, oh, and by the way, this is just as big a market. Like we should probably focus a little bit on it at least. So right now, Tesla is primarily a B2C company. And you alluded to this a little bit too. Like it's like consumers branding and emotion and, going to Mars and all these things. Like you're driving a car and the doors do that. And, it farts when you turn on the blinker and all these things. Like, it's like, those are really, quirky, cool things that consumers will respond to. That a utility is like, I don't want my Megapack to fart. Like there's no benefit to me. Like it's completely ROI driven,
right? And
it's a much less sexy market. And so one of my reservations a little bit is, Tesla doesn't. Obviously, there are some reference points where they're selling these big grid scale Megapacks and things. So it's not like they're completely flying blind, but there isn't a huge track record of them in B2B markets knocking it out of the park. So that's, something to keep in mind. But basically the way that I think about the energy opportunity is there are some B2C, like a Powerwall type of a thing where, it's a battery that you put in your garage and you can charge it using the solar panels on your roof. We didn't spend a lot of time modeling that. Right now, the primary driver of the bigger, Megapack type stuff is, there's a lot of this peaker plant stuff. So when, like in Southern California or in, in places where electricity costs are very high, you can use these big batteries in order to, load shift, or if you're a utility and your natural gas fired peaker plant is coming up, for, potentially mothballing it and starting anew, this is maybe a good alternative. We also didn't really pay attention to that. Like, I think the real driver in a long-term sense is renewable energy penetration, right? Because if you have a lot of grid reliance on wind and solar, then necessarily you're going to have intermittent electricity supply, which is problematic for a grid. And the higher your wind and solar reliance goes, the more storage capacity you're going to need. And so that's when you start getting into these massive, massive numbers. It's not like, oh, there's a peaker plant in Southern California here. And, like you don't just use these to satisfy air conditioning demand on really hot days in August. Like it's going to be a fundamental part of the grid. And I think renewable energy penetration is the main driver of that. So then the question becomes, okay, so how much electricity are we going to need between now and 2040? We use the IEA, so they have global electricity by region and everything. And then it's what percentage of that is coming from renewables versus coal versus hydro versus whatever else. By 2040, according to one of the IEA forecasts, it's something like high 30s or something % coming from wind and solar. So sun isn't always shining, wind isn't always blowing, but yet 40% of your electricity worldwide is coming from these intermittent sources. So how much storage do you need in order to deal with that amount of volatile energy production? There was a study, and I can't remember who, like University of California, Davis or something like that, where they said, if you had an 80% reliance on wind and solar in the US, you would need enough storage so that the US grid could function purely on batteries for 12 straight hours if you were 80% reliant on wind and solar. So if our model says that by 2040, we will be 40% reliant on wind and solar, we don't need 12 hours worth of storage. Maybe we need something less than half of that. I don't know. Maybe I can't remember what we said, like 5 hours or 6 hours worth. So then you can calculate how much total storage demand are we going to need in 2040 if this is really what the grid looks like out there at that 20-year time horizon. Then you back calculate, you basically every year between now and then, what is the electricity demand, what is the penetration coming from wind and solar, how much storage do you need in every year, and you calculate the incremental storage, and then you calculate how many batteries Tesla needs to sell or the world needs to sell. And then we assumed that Tesla is like a third of it or something like that. And then we make some price per kilowatt hour assumptions, which are sort of finger in the wind. Mm-hmm. Like, I don't think you can really take, the numbers that were at Battery Day and put them into a mega pack. Like, that's not the same. It's not going to be $60 a kilowatt hour or 80. Like, but I don't know what it's going to be.
So there's other technology involved. It's not just like a vehicle. It's not just the actual battery cell sitting out there, doing nothing.
Exactly. Yeah. Like, you've got different racking. You also have a whole bunch of things that don't scale with volume, like utility or union electricians or whatever, who are out there actually swinging hammers and things. Like, there's all kinds, like it's fundamentally different in a lot of ways than just building a vehicle and selling it to a consumer in a transaction where you get the cash before you have to pay your supplier. Like, there's percentage of completion accounting, and there's these massive projects, and like it's a completely different business model. But anyway, like I said, with the software stuff, at least now we have sort of a framework regarding how to think about it. Maybe the assumptions are wrong. Our per kilowatt hour pricing, is like, I think right now, if you look at it, it's in the neighborhood of $500 or $600. Like, if you look at a Powerwall, just at a Powerwall, like, what's the capacity of a Powerwall? Look what the price of a Powerwall is, divide one by the other, and you can get the price per kilowatt hour. And it's certainly not $120, right? It's like 6x that or something, 5x that. So, and you can do similar math on the few data points that have been assembled on Megapack to try to triangulate what the right sort of price should be, but we may be way off. But the numbers certainly are big enough so that once you get out there, if those are the assumptions that you're willing to make, then it is as big of an opportunity as cars.
Do you remember like what, in terms of, gigawatt hours or terawatt hours you guys had for the TAM? Which, by the way, is total addressable market, if anyone isn't familiar with that.
Yeah, so we have, let's see. I'm sorry, I'm looking at this right now.
No worries. Gives me a chance to look at some of the questions we have coming in here.
Okay, yeah, I've got a couple other ones here too that we should definitely get to. We're gonna try to keep it to an hour. I was telling Rob beforehand, nobody ever accused me of being straight to the point on anything. So global storage capacity in 2040, cumulative, so the total amount of installed batteries, we have at 22 terawatt hours in 2040. That assumes 40% reliance on wind and solar.
So linearly a terawatt hour a year, but obviously scaling up towards the later years.
Yeah, so that's right. So, we have, in the next several years, it's in global demand, it's in the neighborhood of, certainly measured in gigawatt hours and like tens of gigawatt hours rather than thousands of gigawatt hours.
Right.
But as you get out into the 2030, again, like this is all just sort of mechanically, it's driven by that penetration of wind and solar. So, you make whatever curve, assumptions you're going to make, and then that feeds into the model. But yeah, eventually, you're putting in 2+ terawatt hours a year.
Right. And I'm trying to think, just like do the math in my head here. A terawatt hour, and let's say it's like, I don't know, $200 a kilowatt hour. That'd be 200 billion. Is that right?
Yeah. So, in terms of, that's what we assume. We start at a price per kilowatt hour of 300 something now, and then have it tapering down into the mid 100, like 170 by the end of the forecast period. And then if you apply that market share assumption I was talking about, your Tesla's making certainly north of 100 billion, sometimes close to $200 billion a year in revenue.
And are you forecasting Tesla to have, so in the later years, yeah, you have more than a terawatt hour per year, and you have Tesla having some percentage of that, and they're probably around, then Tesla's share would be around, that terawatt hour level. Is that what you're saying? Kind of.
Yeah, actually there are a couple years where Tesla itself is delivering more than a terawatt hour.
Right.
I mean, there's nothing really magical about this, like, part of it.
No, for sure.
But
I just think people don't, like, a lot of analysts haven't really covered this, and certainly it's something that I haven't spent enough time talking about. So I think a lot of people just don't even, at that fundamental, just basic level of like, okay, here's the assumptions, here's the basic math of like what this could look like. Even, I think people don't even have a really good understanding of that yet. Like vehicles, sure, that's easy. We know what a vehicle sells for, but it's just kind of a bit of a black box at this point for people. So I think that's super helpful to just even have that context.
Yeah, I mean, it was a black box for us too. So we have a team in Houston. You'll find that I think a lot of people, this is maybe a little sort of inside baseball stuff, but I think a lot of folks on the sell side and the buy side, just like me, are trying to sort of go where the market is telling them to go. So if you used to be, an industrials guy, like I did, or a capital goods, people who make things out of metal, none of those companies can get a multiple anymore. So you sort of focus on the areas where there's growth and where there's disruption, where there's fun things happening. And so the same thing, like we have a team in Houston, and you can guess what they historically focused on, right?
Oil.
Super, very good. Yeah, but I mean, like some of the smartest people I know work on that team. And so they've got now a couple analysts who are, all in on solar and all in on wind, and they're going to be getting storage data and things that we can start using, so that at some point we're going to be able, just like in the auto market where I was talking about earlier, be like, okay, how many cars were sold in Europe this quarter? How many of those were Teslas? How many were sold in China? How many were Teslas? We can do similar things in energy so that we have, waypoints that we can use to start building a model. So we're not just like operating in complete darkness, which is what I still think a lot of people are doing.
Mm-hmm. That's super exciting. Like, I can't wait for that, more of that information to come out. That's really exciting.
It's fun for sure. And again, like I think partially this is a function of the fact that the P&L contribution is still so small. So it's easy to not think too hard about it. The other thing too, that it's only relevant to talk about it now because of Battery Day, right? Battery Day opens up capacity, because so far the energy business has been on allocation. Like even if there is incremental demand for batteries for some application, Tesla doesn't have time in the day to satisfy that demand. So, you need these step function changes in battery manufacturing capacity in order for this market to be a shot on goal. which it is now becoming. So yeah, it'll be fun.
So on battery day, let's talk a little bit more about that. And I don't know, can you go over an hour? Cause we're already like 10 minutes away.
I know. I'm fine. People can, I don't care. I don't know. Jess is probably listening on mute. I'll sit here talking about Tesla all day.
Same.
And people can drop off if they want to.
Cool. So on battery day, I'd be curious to hear, every time I'm with you, I ask you sort of what the institutional perspective is. And I think we're getting a bit of it from those questions, but what is sort of the reaction to battery day, Ben? Are people skeptical? Are people buying in, or just kind of wait and see, or what are you hearing?
So I think there were a couple things on battery. First of all, I think some people have been programmed to expect these events to be, really awesome and flashy. And by really awesome and flashy, I mean like, here's our new car that we're going to start selling next year. This is what the price point is going to be. That's something that people can take and put in a model. Like, oh my God, like a Cybertruck, did you see that thing? Like, I can't believe it. The window broke, blah, blah, blah. And then everybody starts talking about it. And like, you know what? They got 400,000 orders or 500,000 orders, and they're going to make it in Texas. And there's 1 million of these sold a year. You can put specific things in your model. Autonomy Day and Battery Day were not that kind of event. And they weren't supposed to be that kind of event.
Right.
And so people who came into it thinking they were going to be able to pull out their Excel spreadsheet and like put in a big new line item for some flashy new product were disappointed. I talked to other folks who, there were some people like yourself who on the buy side who got to go. And a few of them actually, snuck their way in and saw the facility, which I guess Gally also did.
I almost made it, but I didn't quite make it.
Oh man, you just got to finagle your way in there.
I'm
sure you could have gotten
it. I was
close. But they come back thinking like, how is it that people aren't completely losing their minds over how amazing, this event was? Like, why is, and I think it's partially because of the fact that it was so, like, it wasn't like some bite size, like a product that somebody can take and quantify and monetize and easily conceptualize, right? It was lots of really cool stuff, and it shows you why nobody else even has a hope of closing the gap. But that's still not something specific,
right?
So that I think was the initial take. But I also think that people, who are listening closely enough and, sort of understand what Tesla's doing, came away satisfied that it truly, like, there isn't anybody else who's even in the discussion. And, one of the things that I find super fascinating is, a decade ago or whatever, when the Gigafactory was first envisioned, that was like a crazy idea. Like nobody would ever think it. Like, you'd basically take the entire global lithium ion supply chain, put it into one building in the desert in Nevada, and have it be the biggest building on the face of planet Earth. And people are like, okay, like this guy, he's completely off his rocker. And now you have everybody just falling all over themselves trying to basically replicate that strategy. And it's like, okay, we got to get cells, and we got to get modules, and then we got to get packs, and then we got to, do it like Tesla's doing it, only to find Tesla hold a battery day and be like, nah, we're not going to, like, we're going to,
no more packs. Yeah, no more modules.
Yeah, we don't want them packs. We're going to put it right in, airplanes, right? It's like an airplane wing. And now, like, can you imagine all of these people who are like, oh, like, crap, we're trying to replicate what Tesla was doing 10 years ago. Like, I guess we should just scrap all this and, like, get started on doing what Tesla's doing now. Like, it's got to be so demoralizing. I thought it was an amazing event, but, I can understand why wasn't super like a punchy one line event for some people maybe.
Well, it's certainly no like Apple event with their, especially these days with the post COVID era.
Yeah, but anyway.
I mean, I would agree. I don't even really think, I was in there in person, but I didn't see anything that anybody else didn't. I was in one of the vehicles in front and sort of just watched the live stream like everybody else. I did honk a couple times, yeah.
Honking your horn.
You get caught up.
Very nice.
You get caught up in the event, but all right. So I've got some questions here I want to take.
Okay.
So let's see. We talk a lot about China. This one is from also Mike VBF. He says, Alex, do you think XPeng can compete in the same space as Tesla by leveraging what they can copy from Tesla while creating a more luxurious vehicle and perhaps realizing margin on the software side? So for those that aren't familiar, XPeng is based in China, one of the EV startups there. They have relatively competitive products, it seems, from a price point and range performance perspective. Maybe not quite the performance that Tesla has, but they're probably one of the closest competitors just from a spec perspective. Obviously, they're not there on the volume or the margins yet, but they do seem to have a relatively, competitive product that could have some market share. So this is something I'd love to hear from you too, Alex, what your thoughts are on them.
Yeah, I mean, so we don't cover them. One of the issues with them and also Li Auto is, so I speak Chinese. I used to live in China. And up until COVID was in China a couple weeks every quarter. I haven't been back to China since like this time last year, which is a long, long time for me. And a lot of these companies, Xiaopeng and Lixiang, both have only been public. Like the last time I was in China, neither of these companies was public. And I don't cover stocks in general without having first had the ability to kick the tires. But specifically, and especially in China. And so I don't cover them. But what I do cover NIO. And what I will say about all three of these companies, actually, like when it comes back to Mike's original question on like what Tesla's ultimate, ability to sell vehicles. Obviously, they're not going to be selling every single vehicle on the face of planet Earth. Who is going to be part of the discussion 10, 15, 20 years from now? And I think that it's more likely to be companies like these or Rivian, companies who started with a blank slate and don't have all of the baggage that goes along with being an incumbent automaker. And who did their best to sort of mimic Tesla there are some things I think in China in particular that these companies are going to have an edge over Tesla. Partially they're Chinese, so they have that going for them. NIO, and I mean, Tesla was able to get pretty sweet deals on its, debt, and they have incredible government relations and all of these things as well. So it's not like the government's throwing up barriers and trying to prevent Tesla from succeeding in China. That's absolutely not the case. But, if any regulator or local official or something, if you've got the choice between, helping NIO or helping Xiaopeng or any of these other companies instead of Tesla, you probably take that chance. So they have that going for them. Some other things that I think there are local nuances in China that local brands potentially are better able to pick up on. We've talked in the past, Rob, especially in this luxury segment, the three German, BMW and Mercedes and Audi, or BMW, Benz, Audi, the BBA brands, had the luxury sedan market in particular on complete lockdown. It was like 75%. You could set your watch to it. They would always get the share, and everybody else in the luxury market was just sort of, 6 of one, half dozen of the other. Tesla basically forces its way into the conversation in China in a way that no other luxury brand had done, and I think opened up the discussion then be like, oh, okay, well, so if I'm going to buy a car that's in this price range and it's not one of the BBA brands, then it's like I can buy some other brand. And like there are these like this Chinese brand is awesome. Like they're cool cars. Neos, like they're nice. It doesn't feel like a chintzy, no-name Chinese brand. The battery swapping stuff that Neo's doing, China is probably a better market for doing that than the US is. I know Tesla basically tried its hand at this and punted early on because nobody used it. But in China, like you don't have, like in the US, 3 out of every 4 people living in single family homes with garages where you can charge your car. Like everybody lives in high rise in an ultra dense urban environment. And so battery swapping, isn't just a road trip thing. Like in the US, I've had my Tesla since 2016, and the only time we ever use the supercharger network is when we're driving hundreds of miles, like when we're on a road trip. And if there were battery swapping in the US, that would also really be the only time I would ever use it, because all the rest of the time I just charge in my garage. But in China, that equation is different. And I think Neo and others are maybe a little bit better dialed into that. So anyway, like I think that bottom line is I think that these companies are actually worth the time of day, or worth some bandwidth to look at. And they're not the same, clearly, as all of these other cats and dogs that were going public, or that were selling electric vehicles in China over the last decade and a half. Like some of these companies are just complete jokes. These companies aren't.
Yeah.
So
that's good perspective. I think what I like about them is they are more like electric vehicle pure plays. That's my big problem with, the legacy competition. I just think transitioning over is just, a bridge too far to cross for a lot of these people.
I think that, yeah, if there's that, I think has actually been the biggest takeaway. Like if you were to try to boil down the main reason why Tesla has gotten this sort of valuation expansion that it has over the last year and a half, it's, I think, the market coming to the collective realization that nobody else, like all the incumbents, don't have a leg to stand on. And, this year was supposed to be the year when we saw all these product unveilings that were going to come out, and like Tesla killer this, Tesla killer that.
Yeah.
Like there were so many Tesla killers, and like they sell like dozens a month or hundreds a month. Be like, well, this is not killing Tesla.
Yeah.
It's just killing your ICE margins.
Right.
And so that, yeah, I agree.
All right. I'm going to take a brief pause here. My AirPods are dying. So even though this is a live stream, we just got to deal with it.
I do have one other question here that I can address, or try to address. And so it's on HVAC. Can you hear me, Rob?
Yeah, I can still hear you. I've got one charging.
Okay.
I'm going to alternate them. Hopefully that'll work.
Okay. So HVAC. What do you think? Do you think that I think it's too far down the priority list at this point. I don't think that, and electric jets and all this other stuff. Like I don't know. I don't think they're going to pursue HVAC.
Yeah, I think there's probably not a lot of reason to model for it right now. I think it's, there's enough stuff in Tesla to model without having to deal with that, and enough upside and all that. Yeah. I think it's kind of like a nice to have if it does happen. But yeah, it's probably always going to be relatively too small to matter.
I think the issue is that one of the cool things about the company is there are so many cool different markets and different ways that, and you can see that obviously Elon Musk, he just jumps from sort of industry to industry, just blowing them up. And you can tell that he's frustrated because there's only 24 hours in a day, and there's only so much you can do with the engineers that you have on staff. And and I think that this, like HVAC home energy consumption in general, and having it all tied together with one ecosystem, solar, and you've got a power wall in the garage, and you've got, this ultra efficient HVAC, which is piggybacking off of the HVAC, the octavalve or whatever that they're putting in the Model Y. Like, I think all of that is super cool. And I think he would probably get jazzed up over beers talking about like all the things that you could potentially do. But I think in the end, it's just like with the energy storage business, right? Like, you're not gonna risk the Model 3 production ramp chasing after incremental megapack volume, or and so there's always going to be a priority. And so right now, I don't even think the HVAC thing registers on the top 5 there. Yeah, I mean, I don't know.
I pretty much agree. I think it's just like a nice to have if it does happen, and if it ever ends up being something significant, like people can add that to their models like they are with energy.
Yeah. Maybe one day we'll add a tab for it in the model, and then
throw it in.
Add another couple $100 billion to the valuation.
Yeah, we'll be back next year talking about how we missed the boat on HVAC.
How could we miss HVAC?
So dumb. All right, another question here. This one's a little bit in the details in terms of the math, but I think it's interesting. So, Rob, Alex, 3 terawatt hours by 2030 means at a 50-50 split, 580 billion in automotive plus 450 billion in energy. Average selling price on $38,000 average selling price on the cars at $300 per kilowatt hour on the energy. So probably pretty similar to what you've got in your model. So $1 trillion in sales, 2030. So this person is then saying at 5 times price to sales, that's a $5 trillion market cap. And then he's looking for our thoughts on that.
So yes, like I mentioned at the beginning, like we're not modeling anywhere close to that in the auto business.
Right.
Like if they really have 1.5 terawatt hours of battery capacity, and they're able to convert that into the equivalent number of Model 3s and Ys and Model 2s and Cybertrucks and whatever, and sell them all at the asking price,
which is 15 to 20 million vehicles, just doing the quick math.
Right. I mean, multiples higher than what we're currently modeling, then yeah. But
we got to see it happen.
It's not completely, yeah, it's not completely nuts. And like I said, like we're currently modeling, I don't know what you want to call the $25,000 vehicle, Model 2.
Yeah.
Right. I guess is how
it's a standing name, I guess. Yeah.
Yeah. It's too bad because the word sexy has already been spelled.
Well,
so
too sexy.
Is that what it comes from?
I don't think so, but it does fit well.
See, this is the kind of stuff that you only pick up on when you're talking to people like that. Okay. All right. Well, yeah. So
Alex's mind is just blown right now.
Yeah. Like, I like it. So yeah, we're modeling 0 units for Model 2. So, and we've only really known in a concrete sense that Model 2 is coming for the last couple weeks. So there are multiple levers to pull where you could get to a point where that's the type of revenue that the company is produced. I mean, like and maybe they're off, like, who knows? Like, I don't know. That's a pretty ambitious ramp, 3 terawatt hours. The other thing too, that's still non-specific is, like, where are they going to be built specifically? And
all
when?
These vehicles you're saying?
And these batteries. Like, we know they've got a 10 gigawatt hour pilot plant. Like, that's real. We know that they're, presumably they're going to build them in Berlin, and they're going to build them in Texas and in China,
Eventually,
mark?
Yeah.
And where? And what are they going to do with Gigafactory in Nevada? And I don't really know all of the answers to these questions. The other thing too that I thought was fascinating about Battery Day, which they didn't elaborate on really, unless maybe they did when you were there, is they talk about increasing purchases from their suppliers, right? And they're out there talking about how, Panasonic's this great partner, which they are, and they invested a ton of money in Gigafactory way back when everybody thought Tesla was a fraud, and all that. And they're buying from CATL and LG Chem, but they're not buying custom cells that are integrated structurally into, like, that's a proprietary Tesla cell. And if they're migrating that way with all of their vehicle architectures, then what are they buying from these other guys?
Yeah, I think it's kind of a bridge strategy. I think it's very clearly a bridge strategy right now while Tesla ramps up the production of, their tabless cell to pack construction. But once that is ramped up, I think that's a really fair question. What I do wonder is if Tesla tries to pull suppliers along and get them to start producing something similar to what Tesla is producing.
Yeah.
Because as Tesla said, like, they're 3 terawatt hours. It's a 20 terawatt hour problem. That's still only 15% of the market, even if Tesla does, hit these super ambitious targets. So,
yeah,
maybe that suppresses Tesla's margins a little bit if they help bring competition along. But it's also, you got to come back to the mission and at least think about that a little bit. Tesla does actually want people to at least be in the ballpark, maybe not the leader, but Tesla's not trying to just have 100% of everything.
Yeah. The other thing that I thought too, like in the back of my mind, my suspicion is that you have these other cells, also LFP cells, right? Where in applications like stationary storage, where you don't need every single gram, right? Like, you don't care what the footprint is. You don't really care. Like, you're not trying to maximize for range and, volumetric and gravimetric density and all the things that really, really matter in a vehicle, right? A lot of the innovation that they were talking about at Battery Day was how to get the cost per kilowatt hour for vehicle-oriented batteries down by integrating them into the structure of the vehicle and all of these awesome things. But a lot of that stuff doesn't really matter all that much in stationary storage. So could they take all of this proprietary cool stuff, put it in their own vehicles, specifically vehicles, right? Where that's where you've got the volume and the churn and the visibility on, and then take all the stuff that they're buying from other folks and just put it into big battery packs.
Yeah, I think that's definitely an option. It just probably matters how low the price is, and I think what the ratio of the actual dollars per kilowatt hour of the battery cells versus the rest of the components of whether it's Powerwall or Megapack or whatever, whatever energy product, what the ratio of those costs are. Because if the actual battery is a relatively smaller amount, the savings aren't going to be significant enough to actually like drive the market share like it might in the vehicles. That's what I get to do. Yeah, I mean, the solar business it's gone down, like, since they acquired Solar City. It's a different business model now, and it's transition period and all that, but yeah. Oh, shit. All right, hold on, Alex. We lost your audio here. Yeah. It's on my end. I'm guessing I'm guessing I'm messing with the AirPods. Sorry, guys. We're gonna try to get this fixed. I think you can probably still hear on the Zoom call on your end. I think it's just the streaming.
been looking at my inbox because I have too many questions now.
We got you back, I think.
You can hear me?
I can hear you. We should be good.
Okay.
So sorry about that, guys.
Okay.
Little AirPod technical difficulties, but we're figuring it out. We'll do it live.
Fight through it. So I can't remember where we were prior to this.
Well, you were talking about just like the $5 trillion sort of thing.
Yeah, right. So, I mean, I guess the point I'm trying to make is that if you go back through and really look with a fine-tooth comb at everything that Elon Musk or others at Tesla, but primarily Elon Musk, have said, that a lot of times directionally it's the right message, and they're not betting 1,000. And there are situations like with solar where you could definitely take their historical rhetoric and not necessarily match it up perfectly with what has actually transpired.
Sure.
That doesn't mean that it won't. It's a timing thing, but it's probably the same with this 3 terawatt hour calculation. Like, it's one thing to say it, and it's another thing to actually do it. I have another question that I can ask Rob if
Sure.
you want.
Yeah, let's do it.
All right, so let's see. I'm just reading it verbatim. I don't even know what it says. So on the cost reductions from Battery Day, do either of you have a sense of what will become industry knowledge and what will be shared with industry partners? It seems like cell design, anode material, cathode material, which accounted for 14%, 5%, and 12% of the cost reduction, may be shared. Do you think it makes sense then that Tesla's competitive advantage will lie primarily in the cell factory, which is 18% of the cost reduction, and cell vehicle integration, which was 7% of the cost reduction?
I think
Probably.
that's an awesome question.
Yeah.
Very astute question. I think that's a great way to look at it. I also think the dry battery electrode technology, that would fall into the cell factory portion of that equation. Is that?
Well,
I don't have
yeah,
it
because
in
I
front of me
think
right now.
I don't know.
I think
Yeah,
that would probably fall into
I think
the
that it
cell
would,
factory.
because it's not. Although the material, like there's the actual material, the cathode, it's not a wet slurry, right? And that's like a materials thing, but it's also sort of intimately integrated into the process. Like, that's partially, it's a different material, but it's partially also a completely different process where you don't have the drying and all that stuff. So that's a good question. I don't know. They've historically, talked about how they're very open with, all the chemistry and the patents and things like that.
Yeah,
I don't know.
It is a little bit different on like
electric.
the battery stuff though. Like, they're not as open on
Yeah.
that. So
Yeah.
I would say it's definitely not going to be all of it. Like, the industry is going to progress as well. I think the cell factory is going to be a huge component. And I think one of the biggest pieces is just the vertical integration. Tesla's not having to share, it's relatively thin margins, but they're not going to have to share those margins with the suppliers. An example of that is the cathode portion of this. Tesla's actually going to be, basically producing their own cathodes from the raw material state. So that's going to be a part of that, whatever percentage the cathode was, that's going to be something that doesn't necessarily translate fully over to another OEM, unless that OEM is literally going to the ground and manufacturing their own cathodes, which I don't think any of them have any plans to do. So I think probably it's going to be similar on the anode side. Tesla's already working on, they talked about extracting lithium from clay and, in Nevada. Like, they're going to be doing these things that are maybe not the entire chunk of those other sections, but are portions. So, maybe it's half of that 56% ends up being Tesla.
Yeah. The other thing too that integration with the vehicle is truly Tesla. Like, that's not something that anybody else can really, like, you can't share that. And there's so many different things that Tesla does that, if you can able to take sort of a system-wide view of, like, you're literally going all the way to the mine and you're thinking about what the end product is supposed to be, there are so many ways that you can tweak, sometimes that have nothing to do with any of this battery stuff, right? That also factor into the things that matter: the price of the vehicle, the cost of the vehicle, the range of the vehicle, the efficiency, right? And that's a big part of Tesla's competitive advantage, because they're doing everything soup to nuts. You know, HVAC is included, right? Like that's something that they wouldn't have touched on at Battery Day. It doesn't factor into any of these numbers, but it's definitely part of the competitive advantage that isn't.
It's more efficiency.
Replicable.
You need fewer kilowatt hours per vehicle. That's going to save you, you know, maybe 3 or 4%, 5% on making a competitive electric vehicle. So it's like all those little things add up the entire way, like you said, from the mine to the actual delivery of the even the delivery. Like Tesla's vertically integrated there versus other OEMs, excluding some of the new ones. Tesla's capturing that delivery margin too, like the whole dealership network margin. And it's so tough to compete with how low those costs can go, right? And if they subsidize the hardware with software, like like we always talk about this stuff, and then we come back to it, and it's like, how can anyone compete with this? And I never have an answer for that.
Yeah, that's the real issue. And the thing is, like, I think a lot of these things, like if we look at all these different percentages and, you know, the specific technologies and things, and it seems sort of like buzzwordy. It'd be like, oh, you know, innovation is the real thing that differentiates us. Like whoever innovates fastest, you'd be like, okay, well, that sounds like some sort of like business school, you know, Peterson or whatever, 5 forces of business success and blah, blah, blah. Like that doesn't sound real, but like this is a concrete example. Like Tesla 10 years ago, we could have said the same thing. Be like, okay, well, we'll just completely open the kimono and show you how we build the Gigafactory. And people be like, okay, and then they just like pile on, only to find that the goalposts have moved. Like by the time they're ready to replicate whatever it was 5-10 years ago that Tesla was doing, Tesla doesn't even want to do this stuff anymore. So who knows where 5 years, 10 years from now, where some of this stuff has evolved to. But so I do think though that the spirit of the question is accurate. Like there are definitely parts of what was discussed that aren't specific to Tesla.
Which I think, as we think about just setting the investment aside, I think that's good. That just means that there's going to be more advancement. And I think, I guess, to bring it back to investment means bad news for ICE, internal combustion engine vehicles in general.
Yeah, that's
all right, next question.
I think that ship has sailed. Okay, so let's see. I want to make sure that I have touched on other questions. Do you have any on your side that we can take?
Yeah, I've got a couple here while you're looking.
Okay. I don't even know how many people are still listening, so it could just
who knows? I have no idea.
You and me.
It's probably just us. We got Jessica, we got my editor. There's at least 4 of us.
Winnie's on, my associate.
Nice. All right, let's see. I don't even know if I want to ask this question, but what % of Wall Street analysts covering Tesla does he believe actually understand Tesla? Emphasis on understand. You can pass on that if you want.
I don't know. Like this is a tricky question because there are people who work in Tesla who don't understand Tesla, right? Like I think truly knowing a company, like really, really knowing all of the ins and outs of it is a hard thing to do, especially if you're a sell-side analyst, you're an investor. Like nobody, like Rob studies Tesla every single day.
Yeah.
Every single day.
Multiple hours a day for 7 years. Like I put 10,000 hours into just researching Tesla as a company.
And there are still massive chunks of the company where Rob's going to look at it and be like,
Yeah. I mean, energy, HVAC, I know a little bit, obviously, surface level stuff, but not the details.
Which is still, going to be orders of magnitude better than, your average schmuck on the street. So, I mean, it's a spectrum. I'm sure that there's lots of different, competing interests and ways for sell-side analysts to spend their time. and a lot of different ways for people to add value. Even if you don't know the first thing about Tesla, it doesn't mean you aren't going to be useful in some way, shape, or form. There are a lot of companies that I've covered through the years that I would not be, I wouldn't want you to hold me to every single number in the model, but, especially on the China stuff, like if I would come back from China and I would have just gotten done speaking to competitors of, that company, or suppliers to that company, or customers of that company, even if my thesis on the stock is completely off the mark and I don't understand 80% of what the company does, if I really have that 20% in China on lockdown or whatever it is, then I can still be useful to the investor. So, I think there's, it's a hard, the other thing that makes it really hard on Tesla is they're not like a plain vanilla company that just makes widgets and sells them, and you multiply the number of widgets they sell by the price and then apply a margin assumption. Like there's so many different giant markets that they're going to try to go into, so many different moving pieces. But that's part of the appeal, right? Like you want it to be complicated, and you want it to be dynamic and interesting. Otherwise it's boring. But I hear what you're saying.
Yeah, no, I'd be curious to hear your thoughts. Well, I think I have a couple points on that. So the first, which we've talked about before, I think retail analysts tend to overemphasize the importance of the price target from analysts and underemphasize the research component. Would you agree?
Yes. Yes, for sure. Different valuation is a tricky thing. Price targets are a tricky thing. Different firms, I guess, have different time horizon.
Right, like some literally only model Tesla for 2 years. Which is mind-blowing to me.
And they'll base it on, a multiple of the out year or whatever. Some people will explicitly, like one of the approaches that we took in the past is you'd be like, okay, well, there's huge chunks of the business that we don't know what to do with, and we still don't. And we're not going to attach an arbitrary value, an arbitrary non-zero value to a part of the business that I can't defend. So rather than do that, I'll assume it is zero and determine whether I can buy the stock at the valuation today based on a defensible model of the parts of the business that I do understand. And if the answer is yes, then whether I understand that other part of the business or not is immaterial, because I still think this part of the business is worth owning. And you can base your price target on that. And, so there's, I don't know, but generally speaking, that's true. The price target stuff is tricky, and it's moving. I mean, our price target has been changing constantly over the last several years on Tesla, and it's always higher than whatever it is at that time. But I suppose in hindsight, we should have just gone straight to the price target that it is today, back then.
Well, yeah, technically, but then you're like removing all the discounting risk and everything.
Yeah. So, but anyway, I would ask a question that's maybe a similar question. It's basically turning the question around. Like, how often do you, Rob, in your maybe your subscriber list, field really aggressive, short-oriented questions? Does that happen as much as it used to? Does it ever happen? Like, I don't know, like if you look at 100,000 people, that's a lot of people who listen to you. So I'm sure that there's all kinds of people, but my suspicion is that most of it skews toward people who like Tesla rather than dislike.
For sure.
So like for a period of time, this stock was incredibly controversial from the short interest was always like 30% or whatever. And if you're a sell side analyst, you put your research out there or whatever, and the audience who consumes it, sometimes they're going to be strongly opinionated against what you have to say. Sometimes it's completely valid, all of the points they're making. And, you have to try to take those views into account and refute them and spend a lot of your time thinking about why those arguments may be wrong, rather than just, fielding lots of questions where it's all about the potential. It's like, it's only like, this is obviously going to be a $2 trillion company. Like, why don't you see it? You know, I mean, obviously I do, like, we have an overweight rating on the stock and I like Tesla, and but at the same time, like, we also sometimes have, you know, relatively not heated arguments, but detailed discussions with very smart people who are skeptical.
Yeah. I mean, I wish I could have more of those conversations. It's been really hard for me to find people that are willing to come on and talk to me that have a different point of view. I have had a couple people on, and that invite is always open for, you know, anyone that is listening that has a connection that maybe wants to discuss further a different point of view. I think it's really important to get that point of view out there. Like, that's, even though my channel is called Tesla Daily, like I want people to understand that, like, I have a bias towards the stock. I own the stock. You shouldn't just get your entire set of news from me. Like, I try to approach things and see the other side, and I think I try to do as much of that as I can, but at the same time, it's always going to come back. I always am going to have that bias.
You can start another podcast and call it Tesla Q Daily.
Tesla Q Daily. There have been many jokes about me doing that at certain times.
Really?
Going to the dark side. Yeah.
Yeah.
No. The Tesla Q stuff
right.
has been ridiculous, but I think to your original question, like, a couple of years ago when the podcast started, I would say the angle of the podcast was definitely to try to get factual information out there that sort of refuted a lot of those short seller arguments, because a lot of them, you could just look at the facts of the situation. Like, vehicle fires is a great example. That would get covered constantly by CNBC. If you look at the simple data, it's like, okay, the fire risk is 10-20% of what it would be with an internal combustion engine vehicle. So, like, let's get that fact out there as best we can. A lot of little stuff like that. But over the last
nobody's
year,
going to cover it if a Honda Civic catches fire on the side of the interstate.
Exactly. Yeah. And that's been a problem for Tesla a problem and an advantage. Just the microscope has been on them. But over the last year or so, like, the perception has definitely changed. And honestly, some of the time now, I feel like I have to, like, rein the bulls in a little bit and just, like, bring people back to reality of, like, okay, this is all going in the right direction, clearly. But some of the stuff that gets put out there at times can be misleading from a bullish perspective. And then it's like, all right, we just got to, bring that back in a little bit. And again, try to get the facts out there.
I would say that that there's also a little bit of a sense of that on the institutional side. Certainly now there's a lot more sort of unsolicited incoming call volume from, long only serious investors who 3 years ago, 5 years ago, would have been laughed right out of the room if they came in talking about Tesla as a long. And partially that's because there is a lot more to sort of hang your hat on now. There isn't nearly as much balance sheet risk. There were a lot of things back then that, for various reasons, it just wouldn't have cleared people's screens.
Right, their filters, which something we had talked about off camera a long time ago, but I think a lot of people don't really understand that. People have a filtering process where if those criteria aren't met, it's just not considered. Can't be.
Yep.
So Tesla becoming profitable has cleared some of those filters now.
Yep. And, the cash flow profile is a big deal. There's, you're taking somebody else's money and you're trying to turn it into more money, which is a pretty, like, for the people who really take that seriously, it's a somber responsibility. You don't just want to be, like, willy-nilly throwing money at fly-by-night companies. And for a while, like, this seemed like a going concern risk. And, people aren't going to invest in, one thing also, like this ESG thing, ESG is another, like, environmental, social governance, or whatever it is. That's another screen that people are starting to use. And I assumed that Tesla would screen very well because, the mission is saving the world, basically. But they get like a 0.00 on the G component, right? So that the governance component, right? And so, there are a lot of, Piper put together like an ESG top picks thing, and I was like, oh, well, Tesla for sure. And they weren't even in, well, I think they weren't in like the bottom decile or something of the total overall rank, but they were not in even part of the discussion.
Yeah, interesting.
So different people have a lot of different reasons why they can or can't invest in these stocks. So anyway.
Cool. Do you have any other questions on your end?
I don't think so. I'm sorry if I missed some, folks. My inbox has gotten a little out of control, but I can't see any right now.
Well, I won't keep you too much longer. One thing that I did that I would like to ask, I know you don't cover every company in the world, but do you think that Tesla will be the biggest company, most valuable company in the world?
The most valuable company in the world, man. I guess I would need to cover some other bigger companies in order to answer that question with a straight face. And like, I don't cover Amazon or, Microsoft.
That's okay.
You
don't have to
any
answer.
of these companies.
I just like
Apple. I mean, I honestly do think that it will be part of the discussion. I wouldn't be shocked if we were having this discussion in 2030. Like if they're even close to hitting these capacity targets, this is going to be up there. But I don't know. I don't know enough about the other ones to know how big they could potentially be at some point. My suspicion is that there are probably some of those companies are working with unlimited TAM also, like in Amazon. I have no idea. Alibaba, those were
the two. I spoke with Pierre Farragut earlier this week, and those were the two that he kind of mentioned as
as
possible
at New Street.
Mm-hmm.
Yeah.
Yep.
I like him.
Yeah, he's a good guy. All right, Alex. Well, I appreciate you staying over. I hope this was valuable for your side as well.
Yeah.
It definitely was for me.
I like chatting.
Yeah. We'll do it again.
One way or another.
We'll do it again.
Okay. All right. Thanks a lot, Rob.
Yeah.
And thanks everybody if you stuck around, and if you didn't, thanks anyway.
Thanks for dealing with the technical